Welcome back to class 4 part 2 of what is trend and how it is important in trading. In this section, I will share you about how to look trend with the help of candlestick chart with multi time frame. When I say multi time frame, a different time frame like daily, 5 minutes and so on. Okay. So first of all, what is an uptrend? A simple higher high and higher low formation is a typical uptrend. So to identify trend of a stock in an higher time frame like daily, what is higher time frame? We can say what is higher time frame? Very simple. Looking charts daily, weekly and monthly are the higher time frame, and shorter time frame, anything less than 30 minutes is called as an shorter time frame. So in this case, first to understand the bigger trend, bigger picture of any stock, we need to look at first the higher time frame. And to trade on an intraday perspective, we need to look forward for a shorter time frame. When I say intraday perspective, intraday simply means morning market starts by 9:15 and it ends by 3:30. You in this time span, we need to take a trade and come out of the trade. That is, if you are buying, you need to square off or sell the stocks before the end of the trading session. That is called as a shorter time frame or intraday. So now as we are discussing in a daily time frame, what and how to look at the trend. Look at this. What parameter which I was looking, we are getting it. The same pattern getting emerged. This is the first low and first high. Look at this. Second low, second high. Third low, third high. Fourth low and fourth high. What we are getting is higher highs and higher low formation. So it is very clear that in a bigger picture or an higher time frame, the stock is in a strong uptrend. So now when and how the uptrend will get disturbed or it get invalidated, that means previous of previous, that is two prior low, two prior higher low has to get taken out. If stocks goes below this level, then the uptrend is somehow getting disturbed or invalidated, and from the higher levels the strong sellers are more interested in the stock to make the stock price to move downside. This is a bigger time frame. Let's look at a smaller time frame or an intraday time frame. Look at this same stock, 5 minutes. If the stock time frame decreases, we need to look at every single candle, higher highs and higher low formation. Look at this. This is the first low, first high, second low, second high, third high, fourth and fourth high, 5 and 5. It goes on. What is happening here? The same pattern emerging. Higher lows, higher high formation. Higher lows, higher high formation, higher lows and higher high formation. This tells us this stock on an intraday basis, it is more stronger on towards upside, and how it will get invalidated. Look at this. When price Look at this candle, price shooted down sharply. Now, how this uptrend gets invalidated? That is two prior low, that is previous of previous low. If this level gets taken out on an intraday basis, we can tell somehow from the higher levels, strong sellers are coming into the market to move the stock price further down. But look at this, price came down, but our rule of two prior low, that is previous of previous low, has not taken back and marked the stock shooted up again. Same way, let's look at one more example. This is Bank Nifty and again a daily time frame, that is a bigger time frame. If you are an intraday trader, you need to watch what is the trend in daily time frame first to identify and trade on in favor of the trend in intraday. That is, it is up to your choice of choosing 5 minute, 10 minute or 15 minute on an intraday basis. Same way, if you are a swing trader, look at daily, weekly trend and come back and trade. Okay, so Bank Nifty daily time frame, look at this. This time, as a daily time frame, most cases the trend will be like this with continuous multiple candle, but in this case, every single candle is making an higher highs and higher low formation. On a daily time frame, if every single candle is making an higher highs and higher low formation, that tells us this stock is super bullish. When I say buyers, that is bullish, and when I say seller, that is bearish. Okay, bullish means the stock is moving up, it is in the uptrend, and bearish means the stock is moving down, it is in a downtrend. Okay, so this kind of activity, every single candle forming an higher rise and higher low, clearly tells in a daily time frame that this stock is super bullish. Never ever think of shorting the stock. Only your aim should be plan for a buy side trade because the trend is super bullish. Now look at this, where and when the trend will get invalid. This is the last higher high formation before any down move comes in. Look at this, the down move came and what is the rule? Prior to prior candle, that is previous of previous low, has to get taken out so that the trend is getting slightly weaker and the strong sellers are trying to come into the market from higher levels to push the stock price low. I am selling if this low gets taken out, the trend is slightly weak. The uptrend is getting slightly weak. I am not telling completely the trend has turned to bearish. Okay. So, but what happened is this is the low which need to taken out to make sure that the uptrend is getting weaker. But no, only the previous low got taken out, and look at this. From this point of 27,700 has almost shooted to 30,000, almost 2,500 plus points, as the trend is not got validated and buyers have pushed the price higher. Who are these buyers? They are this super bullish trader or a super strong buyer as have pushed the price towards upside. Now you can have a question in your mind, why we need to identify the trend. Just take an example. Let's take an example. As we know now, this was a super bullish uptrending stock, or in this case Bank Nifty is an index, so it is a strong uptrending index. So now if if you don't know, if you have no knowledge about trend, or if you have not watched or made an analysis by looking at the daily time frame chart, if on any day, any of this full day, that means from November 1st till, if I am not wrong, November 10th, okay, till November 1st to November 10th, in any of the day, if you had a plan for a short side trade, you would have lost tons of money. This is where going against the trend will lead you to lose money. That is what during the start of the class 4 part 1, what is trend, what I have told is, if we follow the trend we can make money, and if we go against the trend we will lose money. In this case, if you are planning for a short side trade, you are against the trend, then for sure there is a very good chance you will lose money rather than gaining profit. You will be in a loss. But on any day, if you would have made a buy trade, there is a very greater chance you would have end up being a profitable trader. Similarly, let's take one more example of a weaker move, weaker trend. Look at this. What I told, what is weaker trend? Many overlapping will be there. Many, it is, if it is any, if either it is an uptrend or a downtrend, many overlapping. Look at this. The price has slowly moved down on this chart. This is the same, but Reliance have taken a smaller time frame, 5-minute charts. Look at the overlap. Even price was coming down, but look at this overlap. Reliance from 1950, 1954, it has came till 1944. Just a 10 points move, but in this 10 points move of Reliance, what is happening? Complete overlap. This is what is called as a weak down move. What I recommend is, if you are monitoring any stock or any indices, if you find this kind of weak trend, completely stay away from this kind of stock unless until you get a clear clue.